There it is. Hi, I'm Caleb Owens with the Insurance Experience. And today I'm with Brandon Coonfield. Brandon, how are you today?
Getting by. It's
I
Friday. It's the
understand.
weekend. We're tired from a long work weekend and everything else
Yeah,
that goes on in life.
I know.
Um, but otherwise, it's gonna be. I think it's gonna be quiet here. My wife is taking my daughter to a Girl Scout sleepover tonight, so I'm gonna be home alone with my son for the evening. So I'll get some peace and quiet.
There you go. Yeah, there's always a bright side to everything. That's definitely a good thing to hear. Um, yeah, so today we're going to talk about a couple different subject matters, but I guess probably one to start it off would be auto accidents and injuries
Yeah.
from auto accidents, and how these different strikes that are going on, and not to mention layoffs from COVID have affected the whole industry, not just the healthcare industry, but also affected the auto um, insurance industry because of inflating costs. It's kind of like everything is all connected together.
Oh
So
yeah.
yeah, if you want to talk about that, like how does that? Tell me about like what does a person go through after they've been in an accident, and most likely people survive. It's very rare you have fatalities now with modern cars, but something we don't, or at least I don't think about, is what happens afterwards. Like let's say you did survive that car is totaled, obviously. It was a major accident. You survived it. But now what happens? Can you kind of walk me through that?
Well, let's. It's not necessarily your car's total. You can have an
Okay.
injury from different types of impacts. There's studies out there. Rimkus does them all the time, where they do continue education credits to talk about the V forces, and what types of impacts actually cause injuries. Um, Now, typically, a rear ender is more likely to cause an injury. A solid T-bone is more likely to cause an injury. Front end head-on collision more likely to cause an injury. Your
Hmm.
typical side swipe, your mirrors passing each other, not going to really cause an injury. I mean,
I
mirrors
see.
colliding. How are you hurt? The two mirrors break. Where where
Okay.
where did you get injury? I mean, there were IMCIS did a study on it. It was actually really. I got to attend as one of my continuing education credits, and like it just doesn't cause the G forces aren't there. But and one of the things that I found interesting was that accidents actually happen in nanoseconds. They don't happen in seconds. They happen in nanoseconds. It feels like seconds or minutes, but it happens really, really quickly. Um,
Wow.
but going back to your question about what happens after an accident and you're an injury and you're living with it, you know, do you go to the hospital? Do you go to the patient first? Do you go to urgent care? Do you go to your primary care doctor? And how quickly afterwards it all comes out, because you think about it, you get into an accident, you got a lot of adrenaline running through your body. So it might be a little while before you realize, the adrenaline wears off and, hey, I'm a little sore, I'm a little tense. Something's not feeling quite right, depending on the type of impact. You got a what's called a minor impact soft tissue, which in the insurance industry is called a missed claim. It's the damages aren't severe, and somebody's got complaining of back pain or complaining neck pain, whatever the case may be. Um, they're one of the harder things to disprove, because how do you disprove soft tissue injuries? It's an aggravation. You're going to have some swelling. You're going to have some pain radiating in your back, your neck, whatever the case may be. So say you're 2 hours outside an accident and the adrenaline's worn off, and hey, my back's twinging. Let me go to patient first. They check you out, and they can do tests. And they can put their hands on your back. They can do whatever they need to. Take a X-ray, and they can see the muscles are twinging, so you've got some kind of aggravation. Well, now what do? You got a patient first. Make a primary. You make a appointment with your primary care doctor. Always make a primary care doctor visit.
Is that right? Why is that?
Well, so it's going to lead you to your next step. Do you
Okay.
need physical therapy? Do you need whatever the case may be? You want to keep your primary care doctor informed of everything in your life, anyways. You go to patient first. They really can't do recommendations. Now, I've heard of patient firsts actually being your primary care doctor, because that's the only place you go to. They can do referrals, but if you have a primary care doctor, that's who you want to go to. That's who you want to get your recommendations from.
Okay.
Insurance wise, it leads a paper trail. It's something that easy to follow. Now, and then so you go to your primary care doctor, and they prescribe a course of physical therapy. Well, depending on the injury, depending on several factors, is that going to be necessarily the end all and be all of what your treatment is? It should be for most people. Most people should be done with anywhere from 6 to 8 weeks of therapy. Typical therapy starts with, you look at 3 days a week, down to 2 days, down to 1 day a week. And it depends on the severity of your injury. You might have up to 10 to 12 weeks. It just really depends. But, insurance professionals really start questioning, why do you have 36 physical therapy sessions in such a short time? You're going every day. Well, that's not, it's like working out. You don't want to work out every single day. You want your body, allow your body time to rest and recover. I mean, part of it, what you're doing is that therapy, are they doing electrical stimulation? Are they doing cryotherapy? Are they doing heat, massage therapy? What it is they're doing, or are they doing some type of exercise that you're doing to strengthen the muscles and help them loosen up? So are they stretching your back? Are they stretching your leg, stretching your arm, whatever the injury, wherever the injury is, they're going to address it. Like I said, 6 to 8 weeks, it should be done for most people. Should be finished. You should be well on your road to recovery and have completely, be asymptomatic. But you get those people, eggshell plaintiffs, that have pre-existing conditions. Now, an impact to them could be a whole lot worse because they're predisposed to being hurt. They've already got a part of their body that is bad. And, a lot of the times prior to the accident, they may have been pain-free. They were pain-free. They were happy. They were doing their business. They knew they had the injury, but they got into this accident and wham, they're just not in the same position that somebody who's healthy is in. So as an insurance professional, there's things that you want to look at. There's things you want to get. You want to get, past medical history. You want to get, 5-10 years of prior medicals. But most, if they get an attorney, they're not going to let you get as many records as you want. The attorneys are going to say, hey, we're going to limit this. They don't want, people don't want their entire history out there.
Right.
And most of the time, if it's something that's clear liability and it's established, me personally, give me your records, let me review it. Give me the demand package, let me review it, and we'll get you squared away and taken care of. Some insurance companies want the whole kit and caboodle, and it just makes it a nightmare to try to resolve these things, which also goes into other factors that, I'm saying 6 to 10 weeks of therapy should cut it, but what happens when you can't get scheduled in? Well, I mean, there's still
right.
a backlog. I even talk to my primary care. For me, I talk to my primary care like, oh, we can't see you for 4 months. What? Well, that's what we're booked through. You're the doctors, the hospitals, the physical therapies, therapists. They're booked. It's something like you said. It's a holdover from COVID. It's things just never really got back to normal in that aspect. So you're looking at extended treatment times because, okay, so you get this eggshell plaintiff, they do their therapy, they go to follow up with their primary care, and they're going to the next step. Say that's pain management. When can you get into the pain management doctor? How far out are they booked? So something that you would think would be done fairly quickly is taking 6, 7, 8, a year and a half, 2 years. And then depending on what state you're in, you could be hitting issues with statute of limitations, which is,
wow.
I'm not going to give you advice as far as that. I can't give you advice. I'm an insurance professional. We are not supposed to give people advice on how to handle their claims. Should you get an attorney if you're approaching the statute of limitation? Well, one of the things I'm going to tell you, look up your state statute of limitations and make that decision for yourself.
Sure.
Insurance adjusters, they want to resolve claims. If they owe it, they want to resolve it for nothing more, nothing less than what they owe.
Mhm.
You know, you always hear, well, what was it, JG Wentworth? We've gotten millions for.
Yeah, yeah.
Yeah, we hate those companies because really, and I think I said this previously, I might not have, but you see a lot of attorneys, don't pay us unless we win your case. Well, they have to say that. There's regulations out there in a lot of states that say, attorneys got to tell you up front, we can't charge you unless we recover something for you. Again, which becomes an interesting aspect for them, because if they lose a case, well, now they've spent all this time and they don't win anything. But
Yeah.
most of the times, they're going to end up going to litigation, and something will be recovered at the end of the day, because it becomes one of those things that you get businesses that go, and even insurance companies, you see things that are called cost of defense settlements.
Hmm.
How much is this going to cost us to defend? And it's easier for us to go, here, take this, go away.
Right. So
Because there is a cost benefit to settling claims outside of litigation. You don't want to go to court. You're going to tie up experts. You're going to tie up your time. You're going to tie up your defense counsels, and all of that costs money. So insurance companies will make a decision to do a defense cost settlement if it's if it's of benefit. So you'll see things. But getting back to the point of an eggshell plaintiff, so you go through that, you get your pain management. Say, you finish your therapy in April. So they wrap up their therapy in April. They can't get into their primary care doctor until July again. Well, there's 2 months gap right there. And the insurance company, obviously the FL party, hey, we want to resolve this. What's going on? Well, I'm still technically treating, and it's not that I want to be treating, or they want to be treating, or whatever the case may be. It's just when they can get in and see people and say, hey, this is what's still going on. What is my next step, or what do I do? And then you talk to your primary care, and they may recommend, try another course of therapy, or try some type of some different type of therapy, or they may like I said, recommend you do a pain management doctor. Well, how quickly can you get into the pain management doctor? And they're booked. They're seeing people. So you get in there another 2 months. So now we're in September. It was July. Now we're in September. Okay, well then when can we? And they, are they going to do medication? Are they going to do braces? Are they going to do a different type of therapy? Or are they going to do? Are they going to recommend surgery?
wow.
Obviously, do we have to go get an MRI? Well, okay, now you got to go to an MRI. Well, okay, when can I get in for MRI? Is it 2 weeks? Is it a week? Is it a month? Is it 3 months? It just depends on, some of them can get you in quick, depending on how long the MRI takes. You could be in for an MRI for an hour. You could be in there for 2 hours. You can be in there for a half an hour. It just depends on what they need and what area they're looking at. If you're looking at somebody's entire back, well, you're going to be in there for a while. If they're looking at just one specific area of the back, you could be in and out in 45 minutes. So now you've had the MRI, the radiologist has to look at it and then get back to your pain management doctor. They look at that and they make an assessment. Well, okay, well, this is what we're seeing. Let's just go with a bulge disc in your lower back. Is it impinging on any nerves? All right, it's not really impinging on any nerves, or let's go to the other case. It is. Well, what is the steps from there? Impingement, you can end up with pins and needles in
Wow.
an area of your body. You've got this phantom numbness. Why do I have numbness? Why is that there? What's going on with that? Well, it's because a disc in your back is pinching a nerve, which controls those the electric stimulation that's in your body, and it goes from your neurons to your nerves, and it goes to, and it says, hey, there's a problem here. Pain. So then, the pain management doctor looks at it, they recommend surgery. Well, how quickly can they get in for surgery? Or, how much of this is coming out of your pocket? How much is coming out of your insurance carrier's pocket? Well, if you don't carry sufficient coverage, if you don't carry enough PIP or med pay or whatever, you could be on the hook for that.
Wow. On top of everything else, you could be on the
Yeah.
hook for it.
Yeah,
Wouldn't that also factor in with the other driver? So, like, let's say that there was another driver. Wouldn't their insurance pay for you as well, your medical bills? No.
so getting to that's an interesting aspect. A
Okay.
lot of providers do not accept what is considered third party payers because it's not a guarantee of payment. So if you're in an accident, you're not at fault, your insurance is primary. It's a primary insurance, it's a first party
Oh,
coverage, it's a guarantee of payment.
okay.
The
So
third
your
party
insurance pays
payer
for it.
is not a
Okay.
guarantee of payment. So a lot of times what you end up happening is, even though you might be fault free, the insurance carrier for the other party is not going to pay anything until you're done treating. So if you don't have any outside coverage, this is where you start getting into a lot of attorneys doing lien letters where with the doctors, or letters of guarantee. Hey, they need this work because they've had this accident and, they can't afford it. I've seen things where people have gotten loans because they
Wow.
needed to get whatever it is, or they need to even just live because they don't have, they can't go to their work. They run out of sick time or vacation time or whatever the case may be. So they've gotten loans to live. And now they've got these loans and they've got to pay them back somehow. And so you're going to get all of this as an adjuster. You're going to get their demand package from an attorney and you're going to review it and you're going to analyze it. You're going to make an offer. But going back to what we're talking about, where the medical industry right now is just so booked. So you don't know when something's going to end anymore, which is dragging things out. It goes back to what we talked about earlier with vehicles being repaired, the repair times being longer. Well, it's the same thing on the injury side. The treatment time's longer. So the settlement time is getting extended out. And I was actually just talking to my team about that. And, we got to start thinking about these, and we might have to take this into consideration, because oh yeah, they had 6 months of treatment, but it was so spread out, or they had their immediate treatment and then they didn't have more treatment for like another 6 months. Well, why is that? Well, we got to look at it. Is it because they couldn't get into the doctors? It's things that you got to start thinking about and taking into consideration.
Wow.
And it does create a headache for your insurance professional because then, you start talking about pain and aggravation. Well, they want to be done. They want to be out of pain, as quickly as possible and as easily as possible. And then it's like, well, it's not our fault as the insurance professional that the medical industry is backed up. It's not our fault. How much of that do you take into consideration when you're trying to settle a claim? And that's the question that we've got to start examining. Because the attorneys obviously, well, they weren't done treating for a year. But that's not our fault. That's the medical providers industry. We understand they were in pain and we're willing to allow something, but then it becomes a question of what. And that's one of those, moral decisions. It's a fiduciary decision that you've got to keep in mind for your client or your insurance. You do have a fiduciary responsibility to them. You don't want to overpay stuff.
Sure.
You also don't,
So
you don't want to underpay stuff. That, third party bad faith is an interesting way. It's one of the more difficult things to get, but you could end up, facing first party bad faith. That's very easy. You don't want to deal with bad faith at all.
what is first party bad faith or third party bad faith?
So,
What is
like
that?
first party, you have an opportunity to settle a claim within the policy limits, and you don't do it.
Okay. So give
And
me
it,
like an example of that. So they would say like, okay, we were
so
willing to
the
pay
easiest
you
one,
out.
let's just go with like you've got 30, 60, 20. So you got 30 per person, 60 per accident, and 20 property damage. You have an opportunity to settle a claim within $30,000. And as an adjuster, you don't do it. It opens you up to first party bad faith, which is easier to occur for an insurance professional, which has massive consequences. Again, if you're licensed in that state, you could lose your license, you could face fines,
Wow.
you could face penalties from the client. You want to settle these things when you can, where you can. Now, obviously, if you get an attorney, I want policy limits, and the case isn't worth policy limits. You've got to look at it more than just, well, yes, I had an opportunity to settle within policy limits, but the case wasn't worth policy limits. So you've got to look at it. You've got so in this case where you got like 30,000 per person, and that's what the limit is, and let's say you've got $15,000 in meds. You know, are you going to try to settle that within $30,000? Yes, you're going to try to settle that within $30,000. But then there's things like, you know, that's what you look. This is what my limits are. You know, is the case worse more than $30,000? Well, what's the treatment that they went through? Was it 30,000? You know, was it $15,000 worth of physical therapy? Well, it's $15,000 worth of physical therapy. I got some big questions. Why do you have $15,000 worth of physical therapy?
Yeah, that's crazy. But you could easily,
a lot of physical therapy.
If I'm not correct, you could easily get into you know, medical bills that could vastly exceed those $30,000 in a larger accident. Because what you're just referring to, that's a minor accident, if I'm not correct. You know, we're just talking about physical therapy. You're not talking about any actual injuries. Like, let's say they got in an accident, it was a little bit bigger of an accident. You could be talking about some real serious injuries, like their leg was crushed, broken. You could have all kinds of different broken body parts from that. And so your $30,000 could be eaten up within no time. And then you're saying,
in a case like that, if you've got the severity of the injury, you're going to tell them, we've got a limits issue. You know, you're going to tell the other party, you know, whomever, this is what we got. This is all we can offer you. Okay. And it's not that we're not trying to offer you anymore. We're bound by that limit. You know, we can't go above that limit. You know, we you know, do we want to? Yeah. Do we think the case is worth more than the limit? Yes. Can we offer more than the limit? No. If we offer more than the limit, we're putting our clients in a bad spot. You know, it's a limit set, and that's where, you know, what coverage do you as the you know, party that's not at fault have? Do you have more coverage available? You know, you start looking at, well, if you've got matching coverage, if you got 30, 60, 20, and they got 30, 60, 20, well, you both have the same coverage. But let's take that a step further. Say you've got, let's go 250, 500. So you have $250,000, 500 per accident, and you still got the 20, because most property damage, 20,000 should cover most. Well, that's where you can go back to your own insurance company and do what's known as underinsured motorists. You make an underinsured motorist. They didn't have enough coverage to cover the accident. And that goes back to one of the things I was talking to you in one of the previous, is where, you know, carry additional coverage. It doesn't cost a whole lot, but look at your financial situation, talk to your agent,
right,
about what's good for you.
That's a big factor right now, is that a lot of people are squeezed from so many different angles, you know, and what you're saying makes perfect sense, you know, is like, you should carry additional coverages for different things. But whenever you're squeezed financially and you're like, hey, look, I'm living paycheck to paycheck, I'm barely can make things work, then, you know, having that additional coverage, even if it's just like an additional $30 or $60 a month, which 100% agree, that makes perfect sense. You should do that. But I see why people don't, you know, that they're stressed financially. They're maxed out on everything they can do. And that's just not going to work out. But there's something I wanted to talk to you. You talked about comorbidities in the sense of, you call them eggshell claims. Is that correct? Eggshell claims. So whenever you didn't mention something, is in the sense that there's probably a lot of people, you know, a good majority of the U.S. that are essentially that way. You know, they've got some type of injury or something. You know, it could be any injury, correct?
Theoretically, it could be any. Obviously, when you get into an accident, an ingrown toenail.
Right. Not like that. That's kind of a minor nuisance at most.
GERD, plantar's warts, things like that, where, yes, you know, because you got to remember, there's injuries out there that are existing,
really minor,
but they're because of some other unrelated thing, and you know, we're not going to look at those things. But, you know,
sure.
You're
what
right.
About obesity? What about, you know, you didn't mention that, and there's a lot of people, I was thinking about these as we're talking, is that there's a lot of people in the U.S. that are obese, and if not maybe obese, just overweight. And the thing is that these cars and everything else that we're doing, whenever they design the airbags and all the safety systems, they did not design it for a person that is so overweight, or obese, and
Well,
that can affect things, I assume.
that's an interesting thing because at one point, and I don't know how true this
Sure,
is, and it remains anymore. There was one point where I read something that it indicated if you're over 30 pounds overweight, you're morbidly obese.
I thought it was 100, but it's 30, huh? Okay, it's
30,
30.
30. And it's like, wait,
Wow,
30 and you're morbidly obese? What?
wow.
And this is one of those things that I was actually talking about recently with some of my coworkers. We were discussing it, because you look at the body mass index, you look at a lot of things. People carry weight differently. Their frames,
Sure.
you might have a small frame, you might have a medium frame, you might have a big
Hmm.
frame. You could be all muscle and you could be 30 pounds over,
Right, right.
but there's not an ounce of fat on you. I mean, that even the doctors are starting to acknowledge, yes, there's some issues with it, but it's the best that we've got.
Right. It's just a guideline, but there are a lot of people that are larger, let's say, in the
I'm 30
US.
pounds over.
Right,
Technically,
right.
according to my doctor, I'm now 70 pounds overweight. They're saying I should be about 180. I was 180 at one point in my life. I didn't look healthy.
Right.
I did not look healthy. I looked anorexic. I looked really skinny. I looked gaunt. I didn't look healthy. 180 is not a healthy look for me. It does not, on my frame, on my build, it doesn't look good. Yeah, and I've always looked at the doctor and questioned him. You're telling me I need to be this? I'm happy. I want to be at 200. Yeah, I'm more happy at 200. I look better. I feel better. There's all kinds of things, but going into I mean, there's other issues with more than just when you get into obesity, that there's other health issues that you're going
Right.
that can occur. Are you diabetic? Are you hypertensive? Um, do you have you carry extra weight? Well, there's some pain that you might be in.
Sure.
Women, I'm gonna phrase
You already
this.
started something.
I'm gonna
Women.
phrase this. Women
Okay.
carry more weight on their chest,
Okay,
and you hear
sure.
about it
Carry it
all the
differently than
time.
men. Yeah,
My
sure.
back kills me because of the weight that I'm carrying on my chest.
Hmm.
And it could be this. It's the same thing with the extra weight. Their people's backs start hurting, so you've got um and it could not just be women. There's men out there that have larger chests and they're carrying extra weight, and it causes back pain, it causes issues, it causes neck pain. And yeah, that is a real factor in the matter, and they could be asymptomatic. Gravity is a wonderful thing. It keeps us on the planet. But there was something that I read. You are 3 centimeters taller when you first get up in the morning.
Wow, I did not know that.
Well,
That's
you're laying
fascinating.
down, your body, and then during
Huh.
the day you're standing up. Well, your body's getting compressed because of gravity. If
Wow.
you've got a lot of extra weight on you, and not even necessarily a lot, it could be 10, 20 extra pounds. Um, that's extra weight that's compressing your spine. Gravity
Hmm.
does compress your spine. Yeah, if you've ever watched a surgery, what it takes to actually move the bone, the spinal column, they're in there and they've got these things in there, and it's like jaws of life almost, that they're trying to move these things. But our everyday lives, our exposure to just being up and about, walking, sitting,
Sure.
whatever, there's gravity that is pulling down on our body. It's going from my head down to my back, down to my legs. If I'm sitting, well, it's my head into my back. All of it. It's all pulling down on you. It wants you to be at the lowest point. So, when you lay down at night and you rest, your body has a chance to decompress. That was just one of those interesting facts that I learned. I'm like, going, huh, 3 centimeters taller when you first get up, and then through the day you lose that three
Sure.
centimeters. um, but like I was saying, yes, obesity can be a factor in injuries that you're looking at. It could be, um, well, I didn't know my back was hurting until I had it, and
Right.
they get in there and then they start finding you're asymptomatic. We call that asymptomatic. You have this pre-existing condition, you don't know it's there, and the accident happens. It's an asymptomatic injury. Are we going to look into your past? Yes, we're going to want to look into your past history. We're going to want to take a look at things, but we're not going to look at you as an insurance professional and go, well, that person's overweight, they have automatically got back problems. No, we're not going to do that. You can't make that assumption. You know, the I think it was Dark Territory, a Steven Seagal movie where he's on a train and the robbers are on there, and at one point they say, do you know, or are you assuming? And one of the bad guys goes, you know what the assumption is? That's the mother of all up. You know,
Exactly.
when you assume something, the other one is you make an ass out of you and me.
Yeah, that's very true.
You don't want to do the assumptions. Now, are you going to have conception, pre thoughts already? Yes, you're going to have them, but you've got to learn. And then one of the things you got to learn is how to get past those and look at it analytically. Again, insurance is an analytical thing. When you're in the claims, you want to analyze the system, all the information. You want to analyze the injuries. You want to analyze the treatment. You want to look at everything and look at it from a neutral standpoint. And you want to assess and go from that route.
Okay.
That's what I can say.
That's how you do it. Wow. So, but yeah, nonetheless, what you're pointing out kind of really, that it's fascinating. And I can also see that why people end up going bankrupt, from all this stuff. It's even if they do have insurance, this starts to make a lot more sense to me now, like how you could end up going bankrupt, even if you've already got coverage and everything like that. There's a lot of people that probably, that carry the state minimum. And some states that's incredibly low. It's just like that's not going to cover for any minor thing. Another thing I wanted to talk about as well is even if you do have, like, let's call it a smaller accident, it's not even a major accident, just something to tear up the front of the car. Those airbags deploy most all the time. Your airbags are going to deploy, and that force alone it puts a lot of G-forces on your body whenever there's airbags deploy and shoot in your face. That can cause, I'm sure,
Airbag
other
burn.
injuries. Yeah. So
you can get
there's always that.
Yeah.
Oh, you can get burns, but also the G forces it's slamming you back.
What is the impact? Again, a front, so everybody's going forward, that airbag's deploying. Would you rather the airbag deploy and stop you from smashing your head into the steering wheel?
You would definitely die.
Or do you want that airbag to deploy stop you? Because, you could be a lot worse off without that airbag deploying.
Oh, yeah, without a doubt.
And honestly, airbags, when they deploy, the value that you're paying out for repairs goes up. Airbags are not cheap. Those are like $2,000 a piece. So if you have a car that has, let's say, 8 airbags, you got your passenger, you got your
side airbags, something like that.
Your driver, you got the side airbags, you got rear airbags. If all of those go off, you could be looking at $16,000 to replace airbags.
Just for the airbags, nothing else.
Just for the airbags. And oh, by the way, that car is no longer drivable. You cannot drive a car with an airbag that's been deployed.
Wow. Yeah. So even if it was a minor accident, the airbags all deploy. All of a sudden, you could get very, very expensive to where it's almost like totaling the vehicle just because of just alone the airbags.
Yeah, wow. It's some of the side airbags are more. I mean, they're not cheap things, but they save lives. They
without a doubt
reduce the severity of injury. They're designed to save lives, reduce the severity of the injury. But most of the time, if you've done something where you're triggering the airbag, you've hit something with enough force to trigger that airbag. If it's going on a slight tap, there's a problem.
Yeah.
Oh, I've had a minor fender bender and my airbags deployed. There's a problem. Either you're saying it's minor or it's not a minor impact.
Right. It was a little bit harder than you thought.
They're designed to recognize, and you're seeing it in the newer vehicles where this is a minor impact. Is it necessary to deploy the airbags? You look at cars nowadays; they have computer chips in them, which we've talked about. They have computer chips in it, so they're smarter vehicles. They're designed with crumple zones. They're designed to lessen the injuries.
And so then they won't deploy, correct? If they see, okay,
you back into a tree. You're backing up. You're going a couple miles an hour. You accidentally bump the tree. Do you want that airbag deploy? You bump that tree. It's not a very big impact. It might be you just tap it. Whoops, you felt the bump. You stopped immediately. You didn't keep going. Do you want your airbag deploying on that?
Right.
And there's no apparent damage to your vehicle and the airbag deploys.
Then you could be looking
I've got
at
$2,000 worth of damage because my airbag deployed and I just tapped a tree.
Okay. So nonetheless, though, this is kind of like all these different factors that we're talking about is kind of like how this can lead to, a lot of costs and potentially people having to declare bankruptcy. Because what were you talking about earlier when you said they might have to take out a loan? Is because they would have to pay for their medical costs themselves and then be reimbursed. Is that
so? And I've seen this as it's not really that they're paying for the medical costs, because if you got an attorney involved, that attorney is going to talk to the doctor's offices. They're going to do what's called letters of guarantee. Basically, the doctors are going to do the work, do whatever treatment needs to be due under a letter of guarantee. You get paid is when we get paid. Now, what I'm talking about with a loan is they need their daily living expense. Say, somebody that is not working because of the accident, they can't work. All right, I now have a visitor.
It's a big dog. He thinks it's a lap dog.
Sorry, boys. Get down. Hold on 1 second, please.
That's funny.
Go. I'm gonna mute for 1 second here.
Sure.
I'm gonna stop. I am so sorry about that. The dog.
No worries.
If you don't let us out, we're going to have an accident in the house.
I understand. So you got to take care of them.
The loan. All right. So basically, it's a person that they were working, they had an income, they had money coming in while they were working, but suddenly they get into this accident and they have no other source of income. They've run out of vacation time, they've run out of sick time, so they've taken a loan out at horrendous interest rates, and it's money that they're basically taking a loan out against any settlement to be able to live. Wow. And I've seen it happen. I've seen it happen more than once. It's something that's very sad when it happens. But are we ultimately responsible because of the situation? Well, if we're at fault, yes, we're responsible and we're going to settle at a reasonable, but we're not going to settle for the interest that you have to pay on that loan. You chose to take out that loan. We're going to take into consideration. Yeah, you took out the loan. It's settled for this much. Well, that's between you and the attorney, how much you're paying back on that loan. Because typically if your attorney represented and they're saying, hey, do this, we'll take a loan out against the future settlement, you've taken that loan out against the future settlement. That could lead into and has led in cases where you don't get enough money. Well, oh yeah, our case is worth $500,000. Is it really worth $500,000? What's the severity of the interest? And you're taking that kind of, you're taking a gamble when you're doing those things. Again, I am not an attorney. I can't give legal advice.
Sure.
And really, as an insurance adjuster, we can't give out advice about certain things. We're not licensed as attorneys. I might hold my SCLA, which is a senior claims law associate, but that does not mean I'm an attorney, and that does not mean that anything that I'm telling you is gospel. I'm not going to give you that impression. I've been kicking around the industry for 26 years now, going on 27. Good Lord. And there's other people that have been in this industry longer than that. And you learn things and you start to see things, and it guides you on how you approach things, how you are going to do whatever it is you need to do to make sure you are covered with what you need. But getting back to the point that I'm talking about with these loans is that's an extreme case. You hardly ever come across that. They take these things, and they're trying to live, and when it comes time to settlement, the insurance company is going to settle for the value that it's worth. And a good settlement is one where everybody walks away from the table grumbling.
No, nobody's overly happy.
Nobody's happy about it, but you know what? The case is settled. That's a good settlement. And I've actually had judges tell me that. I've had, and mediators are telling me that. And a lot of the times mediators are retired judges. It's a case where it's settled. You've settled the case. You're happy it's settled. Yes. Are you happy about the money, the amount you paid out? Probably not. Is the other party happy about the money they've gotten? Probably not. The only time you see those cases where it's huge amounts of money are when you're talking commercial limits.
Okay, so like a commercial vehicle hit you, and then they're
large
paying out their max limit.
trailers, or
Okay.
or heaven forbid, you've got some issue that's gone to the excess carrier because maybe it's not necessarily an auto accident, it's some other type of covered incident that pays out way more than typical. And I've seen those cases. I've handled those cases. Do we like paying them out? No. Do they get made public? Sometimes. Depends on the nature of the case. Do I want to get into any of them on this? No.
Okay.
No. For the sake of protecting clients, for the sake of protecting, people that have been involved in those types of cases. Those are bad cases. They are the extreme. They are the rare cases. When you're talking hundreds of thousands of dollars or even millions of dollars.
Wow.
Certain things, and typically you don't see those cases unless something comes out that is so horrendous, so heinous that it's like, ooh, I don't want to deal with that. Yeah. So
okay. So those kind of things
those are on the
happen.
extreme end. I mean, do you have cases that you settle for a couple of $1,000s? Sure. I'll give one any day of the week. I stepped on a sensor pin. I went and got a tetanus shot. $500,000, $1,500 you're settling that case for. It's a sensor pin. You needed a tetanus shot. This is what you are not making your money on a sensor pin claim.
Okay. So like you're saying, like the ones that are the ones that we hear about, I should say, like that make the news, the ones that you hear about where these people had a settlement and it was like you're talking about hundreds of thousands of dollars, some big number like that. It's usually involved in like some kind of like, let's say, tractor trailer, something like that, where it was a really bad accident. Obviously totaled the vehicle, sent several people to the hospital. They're in the hospital for months, if not years, recovering.
There
And
could be a
those,
fatality involved. You could have survivors that you've got to take care of. There's all kinds of factors in those that go into play. Jurisdiction, the county, that it gets down to what judge did you draw sometimes.
Oh, wow. Okay.
I've seen jurisdictions where, and this is mainly like in Texas, where it's a plaintiff friendly jurisdiction. And even the judges are plaintiff friendly. There was one that if you ever had this plaintiff attorney show up in Texas, you were like, crap, I'm going to be paying tooth and nail. Okay. You just see that person's name and you're just like, oh.
Okay.
It's a bad day. But the longer that you're in the industry, that you'll start seeing these trends. You'll start seeing these areas. You'll start knowing, Certain places in Illinois, not so good to deal with.
Okay.
You know,
Wow. So I wonder if that increases like the premiums in those areas. So let's say like you have that county in Texas or something like that. I would presume that, you're going to start seeing premiums go up, if not massively, but just, some slight increase.
well, insurance has got to make money somehow.
Right. Right. So you would think
Again,
everybody's going to have to pay for something.
what is the principle of insurance? It's risk transference.
Right.
You
Okay.
pay somebody else to transfer the risk. You've gotten into an accident, you don't want to pay it out of pocket. So insurance got started and it takes a demographic. They pool their money into an insurance company who invests that money, and how they make their money is through investments. It's not because of collecting premiums, because it's yes, they make some money doing that, but they take those premiums and they invest them, and then they make their money that way. Because as soon as they start paying out on claims, they've not made money; they've lost money. So when you've got these large cases that go out, well, yes, that does cost things, but I mean, there's regulations in place federally and even locally and by the state that limit how much of an increase that you can get, your insurance company can do. And then sometimes it's if you've, and I just happened to me, my insurance went up, and I'm like, why did my insurance go up? Oh, well, the state that you live in just did did an adjustment, and they laxed or they allowed us to do an increase.
Just because we can legally, we're going to increase everything now.
Yeah, we've allowed the insurance company to increase their rates. And again, and some of that has to do with, inflation. It has to
Exactly.
do with the cost of parts. It has to do with the cost of treatment. You think gas is bad, and honestly, it's not as bad as it was. We're nowhere near $4, and we're nowhere near over $4. There was a time when we were over $4.
Yeah, almost 5, correct?
Yeah, we hit
US got
5 at one point
450.
too. Yeah,
Yeah.
we haven't even hit that point. But what we're feeling is other aspects that we weren't feeling back when it was $5 a gallon. We weren't, there's some things that, yeah, it was $5 a gallon, but what were the interest rates?
Right. Much lower, of course.
Way lower. Now it's $3.50 a gallon, and the interest rates are, I know, in the last, since 2022, I've seen the interest rates go up 5.25%.
Yeah, exactly. I mean, that's exactly. You're talking about the Fed fund rate, or are you talking about the? Oh, you weren't talking about mortgage
rate
rates.
has gone up 5.25%.
It's about to go up even higher. I believe now they're talking about they're going to go up 5.5, potentially 6. Who knows? But that's crazy.
That's a domino effect. You get somebody that's in debt with credit card, because most of the time the credit card's based off of the federal rate plus whatever amount that the credit card company wants to charge you. It becomes crippling quickly. I mean, so it just just rolls and expands upon
exponentially. Right.
So it affects more than just, when the interest rate goes up, it affects more than just credit cards. It affects insurance. It affects you buying things.
Exactly.
Your dollar's not going as far as it is, so, and in insurance, everybody's allowed to make a profit. We don't want people to not make a profit, but we also, it's starting to come haunt the American consumer, which, again, I'm not an economist, and that's a whole topic for an economist to get on. It's not
sure.
I could go down that street and I could be completely wrong. I'd rather kick that over to somebody that's more qualified to talk about that.
Sure, but nonetheless, from a business standpoint, from insurance standpoint, things are difficult right now. I don't necessarily need to be an economist to just make that opinion point. Is that it's difficult right now, all the way around from so many different standpoints. Just the cost of labor is going up. Obviously, that's a bigger one, and you can't blame these people going on strikes and everything like that per se. They're just trying to get their fair piece of what they see as fit. Like they're trying to. I can't blame these UPS drivers that went on strike and all these other people that went on strike, because I'm like, I could do it. I would do it.
The auto unions going on strike.
Yeah.
The writers, what is it? WAG, the
Yeah.
writers that do
Yeah.
shows. They are going on strike.
What's the big one is the healthcare just recently. It's Kaiser, if I'm not correct. They're a big healthcare, huge.
Kaiser is honestly limited to Maryland, DC, and Virginia. Here.
California. They said California is one of their biggest. It's what I heard. I don't necessarily know.
So it's weird. So here I'm in the Mid Atlantic, and my company has Kaiser, and they've limited it to Maryland, Virginia, and DC.
Okay.
That's where I'm like going, I didn't know that. A buddy of mine just moved to Pennsylvania, and our benefits has Kaiser, and because he moved out of the area of coverage, he had to get new coverage.
Wow.
Because Kaiser didn't cover him in Pennsylvania. I was like, huh?
Wow. So that's going on, and that's going to cause even a bigger effect down the road. We may be talking about 3 or 6 months, but if these companies pay out more money for their healthcare costs or for their doctors, nurses, they're going to recoup it somewhere. It's not just going to be just given. Same thing with UAW. These cars prices are going to go up. They're going to go up. It might not be $10,000. It might be $3,000 per vehicle, somewhere in that range. I don't know exactly what it'd be, but there will be an increase. I have no doubt about that. There's going to be an increase in everything. So that's called wage price spiral. These are fighting each other, driving up costs even higher. So that's kind of what we're seeing. That's what happened back in the 70s. Apparently, is you had this wage price spiral. They kept fighting back and forth, driving up the costs even higher and higher. But yeah, so that's really bad for everyone. It's across the board. From companies, like you're pointing out with the interest rates, those are going up. It makes it a lot harder to survive as a company because you have to pay a lot higher interest just on everything that you do. Now you're having to pay interest. There's very few companies that can operate on a standpoint of where they don't have to have a loan out of some sort. All companies, probably 95% of companies, have to have a loan to operate and to do everything that they're doing. So they're taking out a loan so they can let's say, building a product. They build that product, they take out the loan to pay for it, to get everything going. And then whenever they actually get paid, then they pay back that loan. Those are like short-term rate loans, and they can have extremely high interest rates. Well, as you pointed out with the Fed fund rate going up, that affects all these companies. If it was 0%, 2-3 years ago, now you're looking at 5.25%, 5.5%, and higher. That's going to make it harder and harder for those companies to survive, just to stay in business as well. It's trickling effect on everything. Everything is being affected.
What was it? Reagan's trickle
down in economics.
Yeah,
exactly. So
yeah, you
don't want to be trickled on.
It's not really trickle down. It's this happens, this is going to happen, and there's no trickle down. It's that happened. Oh, guess what? This happened.
It's kind of like what I should have said is more like a butterfly effect, I guess.
Yeah,
butterfly,
like that. It's a cause and effect. It really
cause
is.
and effect. Exactly.
Everybody feels it, not just a certain people feel it. Everybody feels it. Everybody feels that, and what was it? The thing that I was looking at, the government shutdown that could have potentially happened. I don't know.
Got really close, and now we're looking at it again. I'm glad you talked about that. That was we're all holding our breath, thinking that I was convinced it was going to happen. I told my wife, this is definitely happening. There's no way this is not.
Times we've come close to a government
shutdown. I know. That's very true.
Because they cannot agree to extending our debt ceiling or whatever the case is, agree to something. And then it's always, it seems like it's always at the last minute, or they do shut down for a little while. And then, but how does it reopen? Well, they have to have some talks going on somewhere. Somebody's got to be talking somewhere. That affects everything. And that's a whole different can of worms. And does that affect the insurance industry? Maybe.
Okay. I'd be interested if it does, like how that, I'm sure it would, I'm sure everything is connected, and I'm sure it would. I just don't understand it just from the face value. I wouldn't
Yeah,
understand
it's
directly.
probably on some level
It's
that most
interconnected. Yeah.
your average person doesn't even realize or think about. And honestly, I really couldn't comment on it. It's something that's way above my pay grade, so to speak.
Sure. Yeah.
Um, and but again, I've said it before. I'm thankful I'm in the industry that I'm in. It's a very stable industry. There's still a need for insurance professionals. There's still a need for insurance. Can we get affected by things? Yes. Yes, it can. I mean, are we recession proof? No. Are we a little more secure than some people? Yes. Because there'll always be a need for it, and so I'm really thankful. I gotten into this particular field, and
Sure.
it's a fascinating field. It's one that can bring you a lot of enjoyment. It's one that can also bring you a lot of heartache. Um, I like helping people, and it's one of the things that I can end up doing in this industry is helping people um, that that need the help. We're not crass, careless people. We're not. We don't like telling people, "I'm sorry, your claim's denied. We're not going to pay you." It's not what our job is, even though that you hear that a lot. You hear that a lot.
Sure.
Insurance companies just want to deny claims.
Hmm.
No, we don't. We don't want to deny claims. What we want to do and what we're paid to do, pay what we owe, nothing more, nothing less.
How do you think, I mean, and this is nothing on the insurance industry's fault, but like with people getting the state minimum coverage, that's not your fault at all. That's You're just doing per the policy, and they just got the state minimum coverage. You didn't, do anything with that. But so if you're doing your job on that, then they don't get paid out very much of anything. Then they're having to pay out for all these medical bills, majority themselves. That's nothing on the fault of the insurance industry, right? That's
No,
if you've
no,
done
that
nothing wrong.
you've made the conscious decision to choose what the level of coverage. States do require certain levels of coverage, and it's called the state minimum. There's some states that don't require collision or comprehensive. They
Wow,
only require liability.
wow, that's even
Or if
dangerous.
you've paid off your car and you've decided to drop your collision or comprehensive, I don't care if my car is paid off and it's not worth that much. I am going to carry my coverage because, there's some states that have a minimum transportation rule. Your car's total, it's not worth nuts. But you know what? I've carried full coverage. I get $1,000. There's some states that have that written into, and if you decide to drop it, because that's actually one of your biggest costs is the collision and comprehensive coverage is the biggest typical cost. Your liability coverage, and it's weird. It's not as high as you would think it is, but it's your collision, your comprehensive, because honestly, you're more likely to have minor dings and scrapes that you need taken care of. You hit a rock, you hit a tree, but nobody's injured, or your vehicle's unoccupied, tree falls on it, something somehow it gets damaged. You tend to pay out more in property damage than you do in injury.
Oh, okay. Wow.
It's
But you
weird.
really need the injury, though, correct?
You need the injury.
Catastrophic. Yeah.
You need that injury. No, don't get me. You need the liability coverage. You want the liability coverage. But you also want to make sure you're covered.
Right.
There's a case that I have right now that I'm overseeing because my claims professional, and we've got a potential limits issue,
Oh,
and
wow.
one of the parties doesn't carry collision or comprehensive.
Wow.
They're
Okay.
not at fault, but because there's a potential limits issue, we can't even pay out to repair their vehicle yet.
Wow.
Um,
Huh.
there's things that have got to be done, and um, it's a bad accident. I'm not going to give any details, but we're waiting for things to come in. We've got to assess, and we may end up having to prorate it. We may have to file something called an interpleader to protect things. And typically it's not a pay as you come. If you run into a limits issue, and it can happen, you have a high limit and you get a bad enough accident and you can run into a limits issue. It's not necessarily a pay as, oh, well, this person come in, we're going to pay everything for them. Well, is that really fair to the other people that might be in the process of getting represented, wherever the case may be, and they haven't come forward yet? Just because if there's more than one person involved, but only one person has come forward.
Oh, I see what you're saying now. Okay.
Oh, that's a wonderful thing. I just got shoved in my foot. A splinter.
Nice. That's fun.
I'm like, what is that?
So you do see that happen where people hit their policy limits, and then I imagine you can definitely get into bankruptcy with that, because if you hit your policy limits, you're out of coverage. Your insurance is not going to pay out above that, obviously, and then you still have medical bills that can get into astronomical costs. That's just where people end up just going bankrupt.
And that comes back to several different factors. Do you have health insurance?
Right.
Do you have health insurance? Are you carrying? Is there some other coverage out there, that you can get covered? Bankruptcy, you see it, but you don't see it all the time. It's most of the people are not going to go bankrupt, but you do hear a lot about it frequently. Chapter 13, Chapter 7, and I am not in that field.
Mm-hmm.
It can happen. Insurance can happen. One of the things that you see is companies. Bankruptcy is an interesting thing because it does interesting things to policies.
Okay, interesting. I didn't know. Okay, what is that?
If a business declares bankruptcy, and you have an accident that is during the policy period, they've got coverage.
Okay, so even if they go bankrupt, you still have coverage.
But the insurance carrier is the one that's going to end up paying the money.
Of course. Okay, yeah. So that would make sense. As long as they had a policy that was active during the time of accident, then they're going to have coverage. And so okay, just give me an example here. You'd be talking about some type of commercial policy.
Yeah,
and
a commercial company goes out of business they become financially insolvent. So they've declared bankruptcy. They can't pay their bills. They can't pay their employees, but they've had accidents that they're responsible for. The carrier, and they could have high SIRs, or high deductibles. Well, suddenly that money goes to falls to the carrier. It gets messy and ugly, and really, when that happens, there's coverage experts that need to get involved, and they take care of it, and it's a whole other topic. It's a whole other. Now you're talking different kind of money. A lot of the times they're looking at it. Let's resolve the claim, and then it becomes interesting for liability purposes, because you might not be at fault for an accident, but suddenly now you've got a disgruntled employee that you can't get a hold of because they've lost their job. Investigations it creates a nightmare for investigations. Wow. What happened to their say they've got vehicles, what happened to their fleet? People abandon them on the side of the roads, or they keep them, or any number of things. It gets weird and complex and ugly, and it's not one of those things that you wish would happen. I've seen it, and actually it's one I've seen it happen where the company didn't actually declare bankruptcy. They just vanished.
They vanished. That's an interesting.
They basically sold all their assets. They were going to declare bankruptcy, and then they closed their doors. They laid everybody off. but they didn't declare bankruptcy. They were in the process, and I don't think it ever happened. And they just started selling off
All their assets.
all their assets.
So you would see that a lot more with smaller businesses because there's no reason to formally declare a bankruptcy. There's nothing to bankrupt. It's just, you're a small business, so they're just going to sell their assets and be done with it and walk away. But that's interesting. That's interesting to
It
hear.
creates interesting things with the insurance aspect, because suddenly, you've got all these claims out there that you were handling before, and then, oh, well, they're gone. They've gone insolvent. What do you do?
Wow. Yeah. These are things you'd never even think about. Never, ever in my mind.
No,
When I
and
think about a
and the
company
normal
going out.
person is not going to see that, and honestly, the normal insurance professional is not going to think about it. They're not going to see it. It's not something that happens frequently enough.
Mm-hmm.
But there are people out there, and I've seen it. I'm one of the handful of people that have seen it. There's people out there. It's like construction defect people. It's like product liability people. I mean, there's aspects of insurance that more than just your auto accident.
Wow. Okay. So that
Manufacturer's defect, product defect.
I see. Yeah.
Product liability, goods and service, E&O, errors and
Mm-hmm.
emissions. There's a whole lot of different coverages out there that you can look at, and that's when you start looking at people that have got specializations in them, and because that's what they handle, the type of claim they handle. You don't see it every day. Most of us, we're either looking at auto liability, or general liability, which your typical general liability slip and fall.
Mm-hmm.
You're not seeing tons of people out there doing construction defect, product liability. They're out there. We're out there. People handle them, but it's just, there's just so much more than just auto and general liability.
Right. Yeah, I know that. You've seen specialty insurances. There's jewelry insurance that just does jewelry. There's tons of different things. You're absolutely correct.
You can
It's a
add an
big
electronic
world.
floater to your policy now for your electronics, your TVs, your computers, your Kindles,
Just
your phones.
electronics.
Yeah. They're starting to add other things, and it's creating more opportunities and different things and different coverages, and it's kind of more like it's kind of interesting because you look at it. There's warranties for certain things, but the warranties go out of business. But then you've got the insurance coverage to, oh, well, I've got insurance on it, so my computer went out. Well, I got full coverage, so I can get a new computer. I mean, there's conditions within that coverage. Obviously, they're going to want to look at it. Why did it go up? What is your coverage? And they're not just going to replace it without looking at it and figuring it out. But that's a whole different topic.
Sure. Yeah. All right. Excellent, Brendan. I learned a lot. I I really didn't expect to this time. I was like, what are we going to talk about? But you've taught me a lot once again. There's just so many different things that I never would have even imagined. It's really interesting. But insurance is important. It really is. It's really important to maintain your coverage, get adequate coverage. I think I'm trying to sum up everything we talked about. But uninsured motorists as well. Make sure you get that, add that onto your policy, because I'm sure you've seen it, your side of, the house, you see these types of things. And if they don't have that coverage, it's bad. It's real bad whenever they file a claim.
Yeah. It can be. And honestly, I'm going to say it again, talk to your agent.
Sure.
Discuss your situation with them. If you've got an attorney, talk to your attorney, discuss the situation with them. I'm not going to give you legal advice. Everything that I state is my opinion. It's based off of my experience and what I do and what I see to protect myself. Not a broker. I'm not an attorney.
Right. Same here as well. That's just not my avenue, but it's really interesting. And you're right. You just need to reach out to your broker and talk to them. Make sure that they know what they're doing, and then they'll guide you in the right direction.
Yeah, and that's the first step in insurance. I'm kind of a middleman, if you think about it in the aspect of where I work. We're the front lines for accidents. You know, the
Right.
claims professionals are the front lines for accidents, but we're the result of an accident. We're not the first person in the insurance. It's your broker, it's your insurance
Hmm.
company. Talk to them,
Yeah. Yeah.
get the advice from them. You know, as an adjuster, as a claims professional, we've seen a lot, we know a lot, but you know, are we good people to talk to? Yes, but should you take our word as gospel? No. No,
Sure.
and most of us are not licensed brokers. There might be some that out there that are licensed brokers, but talk to a licensed broker, tell them your situation, talk to an attorney, let them give you the proper legal advice. You know, I'm a lot of what I'm saying, it's conjecture, it's drawn from my experience, it's things that I've seen, you know, stories that I've said, and you know, I'll phrase something about, you know, when I've said it, I don't know how true this is anymore. It's something that I've read, you know, because things change, policies change, laws
Very
change.
true. Yeah.
You know, I have to stay up on top of continuing education credits to maintain my licenses because too many things changed, and if I don't, I get in trouble. So,
Wow. Oh, you're absolutely right. Okay. Excellent. Brandon, thank you again for your time. Thank you for taking your time out of your day. I know you're busy. I know you had a long, tough week, and I wanted to just say thank you for taking the time to talk to me today.
oh, I appreciate it. It's very enjoyable. It's you know, once you start talking about it, it's amazing what comes out, what we
Sure.
discuss,
Yeah, I
and
know. And we had some really interesting
you
conversations.
know the rabbit holes we can explore.
Yeah, exactly. Okay.
All right,
All right. Excellent. You have a great day. Okay.
you too. Thank you.
Thanks.